JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 22nd of March 2022. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, also quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So yep, check us out here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, guys, the first one I want to pick up here is Nikkei 225. Beautiful push to the upside and break above this 27,000 mark. And yep, my next target, as I said before, my next target is that 100-day EMA. Now, of course, let's see if we can reach that. It seems like Nikkei that was kind of playing the catch-up game, yeah, yesterday European and the U.S. indices kind of closed fractionally in the red. However, yeah, Nikkei today pushed nicely to the upside. And as I said, as long as we remain above that 27,000 mark, then yes, I'll continue aiming for that 100-day EMA or even the 200-day EMA here shown as the black line, and then yeah, we will take it from there. Now jumping into Shanghai Composite very quickly as well. So yep, here we have an index which is kind of stalling, let's put it this way. I mean, we did have a nice move initially to the upside, a push through that 3,260 zone, but as you can see here, it's struggled to overcome that hurdle, overcome the 3,260 zone. So it kind of remains, or should I say remained, below this area, and we will continue monitoring, we will continue watching this. So at the moment, as I said, yes, although everything's kind of leaning still towards the upside, but the problem here is that this 3,260 territory is providing some sort of a good resistance. So in order for me to, let's say, go for some higher levels, or at least towards that 21-day EMA, I need to see a nice good push above this 3,260 level again. Now jumping into the German index DAX. So yesterday drifted a little bit to the downside, managed to remain above the 21-day EMA, so everything's kind of looking, quite nice here for the buyers still, because we are still above the 21-day EMA. However, this positivity, I mean, it's still kind of it still could be short-lived, because, well, overall, don't forget that we're still trading below this downside line taken from the high of the 5th of January. So that's why it could become a little bit of a difficult one. So at the moment, yeah, keep your eyes on this. Looking at this picture here, yes, I'm leaning a little bit more towards the upside, but again, let's be very careful. Let's be very cautious here, and for now, For now, like I said, I'm aiming for the upside as long as it stays above the 21-day EMA. And if it does stay above it, then yes, my next target is this downside line. And the area around here, I mean, it could be somewhere around that 14,800 level. But I'll pick up on that if we do see a nice rebound. For example, if you want to be a little bit more on the careful side, on the cautious side here, what you can do here is, yeah, keep your eyes, for example, on yesterday's high near the 14,457 territory. If we manage to overcome it, then yeah, I'll slowly go, of course, for the highest point of, I think, if I'm not mistaken, yeah, the current highest point of March. Near the let me just quickly grab a line here, near the 14,553 level, and if that gets clear, then yeah, certainly a push towards that downside line could be possible. So it's a bit of a tricky game here, guys, I mean, on DAX, but yeah, it might be worth the while. Oh yeah, good morning to whoever, yeah, I can see in the chat room there. Good morning to everybody else who's joining in. So I hope everybody's having a wonderful start of Tuesday. Now, jumping into the Dow Jones Industrial Average. Now, yesterday, I haven't looked at this one for quite a while, to be honest. I mean, the last time I mentioned this one, I talked about this potential Fibonacci. And as you can see here, I mean, the 23.6 did act as a very good area of support from which we rebounded. So now what I'm going to do here is I'm going to remove all the drawings, because let's have a fresh look. First of all, the fact that we are climbing back above the 200-day EMA, that's of course, you know, that's bringing a bit more positivity into this whole, you know, this whole near-term outlook. As we can see, we're struggling with the 100-day EMA for now. But yeah, let's see how that's going to play out. In a way, if it pops above the current highest point of March, which is yesterday's high near the 34,808 zone, that's where, yeah, more buyers could join in, and potentially more of them could push this index further north. At the moment, like I said, we are just observing this one. The cash index is trading somewhere around the I think it's somewhere around the 34,535 level. So yeah, a bit of a corrective. Yes, it's not far from the yesterday's close, so it's all okay. So yesterday, for example, although although some of these sectors were seen, like for example the energy sector was seen pushing nicely to the upside, basic materials as well were driving to the upside. However, the indices, the top three indices, still closed kind of fractionally in the red. Dow lost around just a little bit more than 0.5%. Yeah, so the other ones, I mean, that was the biggest loser, then followed by Nasdaq, and then the least loser. Well, it was S&P, which kind of remained somewhat flat, to be honest, for the day. But anyway, coming back to the Dow Jones Industrial Average, and yeah, if you're looking for some upside, wait for at least a push above that 34,808 zone. For the downside, we need to see a drop below that 34,179 level here. Somewhere around here, and then yeah, we could go for some lower levels. And then of course there's a bunch of levels to consider here. I mean, at the moment, maybe one of these will be the interesting one, the 33,395 level here. As you can see here, it perfectly coincides with the high of the inside swing high of the 14th of March and the low of the 16th of March. So in other words, there are some levels, there are some interesting key levels to watch, but yeah, let's go slowly on this. For now, I'm leaning a little bit more towards the upside, but I need that confirmation break above that 34,808 zone. If I don't get that, I'm gonna still remain, let's say, cautiously bullish. Dollar index. So okay, I talked a lot about the dollar index last week and the week before that, so yeah, everything's kind of working out nicely here, I would say. I mean, it's moving sideways. I talked about this. I told you previously last week, in the beginning of last week, I said that we got a hold up here. Maybe we could see a drift back down. A test of this area here, the 97.80, together with the 21-day EMA. If that provides good support, a nice rebound here could be possible. We could see a nice push back to the upside, where we could end up testing this downside line taken from the high of the 7th of March. So at the moment, I am aiming for that. I am keeping an eye on this downside line. If it gets broken, yes, of course, that kind of that increases the chances for further move north. However, I would prefer to see a push above that 99.42 level right here, which is the current highest point of March, and then go for some higher levels. And until then, I'm just aiming for that downside line. Let's put it this way. Good morning to you too, Kai Uwe. Hope you're having a wonderful start of Tuesday as well. Now, gold guys, yesterday, lately has been, moving as a roller coaster ride here. Yesterday we pushed higher, but as I said to you before, that if it stays somewhere below this 1930 zone, or that 1930 or that 21-day EMA, then we could see another slide. But as you can see here, it pushed back up and stayed above that 21-day EMA. However, I'm not saying that I'm becoming very bullish on this one. For me to, as I said before, I need to see a push above this 1950 level in order to go for some higher levels. Until then, like I said, if it continues to trade around here somewhere, I'm just observing the price action, because again, for me at the moment, this is just a nice, beautiful roller coaster ride. So it seems that the market participants are undecided what to do. In a way, on one hand, you have indices that still want to push higher, but Jerome Powell is not allowing them, and not allowing the indices to push way too much to the upside. So with his kind of more of a dovish remarks, and with the fact that the Fed is prepared to raise interest rates until the end of this year, during every single meeting of theirs. So that, of course, that's keeping the market bulls here, equity bulls, a little bit cautious, and gold as well. I mean, gold is the moment. Is it willing to travel back to that psychological 2000 level? Well, let's wait and see, guys. I mean, some of you probably would like to see that. Personally, me, I would also like to see a push back towards that 2000 mark. However, we're currently oscillating around the 21-day EMA, so we cannot really do much. And to be honest, here, let's say a few adjustments have to be made. For example, even with the for the downside scenario. So no longer that I'm going to keep an eye on this level, this that 1929 zone. I'm going to stick to this hurdle here, the 1918 level, which recently, I would say on Friday, and yesterday acted as a good area of support. If we get a drop below that, then we might go for lower levels, initially aiming for that 1895 zone, or the 1878 level. For the upside, we need to see a push above the 1950 level. Still need that, and then we could go for some higher levels. Now jumping into WTI oil. So yesterday, beautiful move to the upside. Everything's working according to the plan. I talked about this. I said that if we push back above the 104 zone, then yes, I'll go for some higher levels, initially aiming for that 114.80 zone. very important level. You already probably are bored of me saying this over and over, but yeah, this highest point of 2011, that's what I'm keeping an eye on. If we manage to, jump and above it again and stay above it for, let's say, by the end of the month, that's where it could become a little bit more interesting again for the bulls. We could see more buyers joining in here, and yeah, we could see this one pushing maybe even higher. However, of course, some of you maybe don't want this, especially if you're, especially when you're coming to the petrol station. But well, that's the that's the reality. And don't get me wrong, I mean it might continue rallying, and it might go in all the way towards that highest all-time high, the highest point of 2008 here, which is roughly around that 147 level. But after that, what comes, what rallies very quickly ends up, selling off sharply as well. So at the moment, it's always just by trying to capture the right moment. So at the moment, I would say yes, I'm leaning a little bit more towards the upside, but I'm keeping an eye on this highest point of 2011. If it holds, maybe we could see that correction a little bit earlier. Or I would say if the monthly candle, the body of the monthly candle remains below this 114.80 zone, roughly around there, then yeah, maybe we could get that little correction a little bit earlier, and maybe then we'll see what it wants to do. Maybe it will correct a little bit lower, test some of these upside lines here, and which I'll, I'm not going to draw it yet, but test one of these upside lines and then reverse and push higher again. So, this scenario could also happen, but at the moment, yeah, we're very close to that barrier. Let's see if we can clear this one. ETC USD, guys, and for this, well, actually, to be honest, I mean, I'll stay on the monthly chart, but I'll jump back into a daily one in a bit. I talked about this one yesterday, and ETC was the one that was started to pop, the first one during this weekend. I mean, when all other cryptos were kind of lagging behind a little bit, this one was just on fire. And yeah, we pushed nicely to the upside during the weekend. Yesterday we stalled a little bit, and today, yes, what I said to you yesterday when I was covering ETC USD, I said that if it stays above that 37.50 level, then yeah, I will continue aiming higher. My next target is the 53.53 level, or this one right here, the highest point of November of last year, near the 65.09 level, and then we'll take it from there. But at the moment, just keep it short and simple. I am actually this 53.50. Okay, yeah. Initially, I'll aim for the psychological 50 zone. That would probably be a little bit more easy, but then yeah, like I said, slowly we'll go for some higher levels. But at the moment, yeah, that's the game plan. Bitcoin Cash also, like if Bitcoin itself is not really rallying that much, okay, it is pushing higher, but let's say not significantly. But this one, BCH USD, Bitcoin Cash, is moving nicely to the upside. In general, cryptos started picking up the pace again, so let's see if if they can rally again. However, not saying that we might see some sort of a crazy rally as we did here in May of 2021. But we have been sitting at lows for quite a while, so maybe a bit of a push, maybe even a push above the 200-day EMA could be possible. So let's see how all this is going to play out. At the moment, we are testing on BCH USD, testing the 100-day EMA. Jumping into a few pairs, fiat pairs. AUDCHF. I talked about this one, if you remember, yesterday. I said that wait for this little correction. I mean, we could get that little correction, and if this 0.6861 territory provides good support, just bang on this test of this area, then yeah, a nice rebound could be possible. Well, all this happened in one day. We had that rebound, and now we are now pushing higher. It seems that we want to go for some higher levels. To be honest, I am leaning towards the upside as well, but I still, given that we had this nice move to the upside already, or I would say rebound here, yes, I'm targeting the upside, but I need that confirmation break above the 0.69 933 level right here, and then yeah, we could go for some for some higher levels. At the moment, I would say this half of this idea is working out. Let's see if the other half can also work out. My next target then is the psychological 0.70 level, AUD JPY. This one is just on fire. I mean, look at this skyrocketing. Again, don't get me wrong. It's it's showing that the market is currently in kind of risk on environment, in a risk on environment. But as we know, like whatever comes, quickly, rapidly to the upside, and then ends up correcting sharply as well. So let's, of course, not yet, but at the moment, what I'm keeping an eye on here is this barrier. I talked about this when I was covering AUD JPY previously. So let me just jump into a monthly chart. So now this is how it looks. I mean, yeah, we're near this key barrier, and let's see if we can. Let's see if we can push further north. We can overcome that. If we do, then the next target is the highest point of 2017 near the 90.30 level, and then we will take it from there. Now jumping back into the daily chart and going towards USD CAD. So quick update. To be honest, not much has changed since the last analysis, but yeah, it's still resting near this hurdle. I mean, talk about an annoying pair. I mean, as I said before, I mentioned USD CAD. I think is my second least favorite pair because it's very annoying. My first one is Euro GBP. But this one, yeah, it seems that it wants to go lower, but it keeps giving us these false breakouts. And to be honest, the more false breakouts it gives us, of course, it increases the chances for for a further move lower. However, at the same time, it also it shows that this level could be a strong one to watch, and maybe a bit of a rebound here back towards that 208 EMA here could be possible. So do not exclude that scenario. And to be honest, at the moment, I'm just gonna leave it here. I will continue aiming lower, but I need that confirmation break below that 1.2587 level. GBP NZD, also quick update. Spoke about this pair already a lot, and yeah, still need that drop below that 1.9041 zone. Yesterday we got that initially, but as you can see here, it quickly reversed, reversed back to the upside. However, I'm not saying that this is like a strong move higher. It could drift lower. Maybe it was just a bit of a corrective move before another possible leg of selling. Either way, I still need to see that confirmation break below that 1.9041 zone, and then yeah, I will aim for the lowest point of November of 2021. GBP CHF. Now this one's tricky and interesting at the same time. I mean, here I have a scenario kind of slightly opposite to GBP and ZD. Now here we have the strong commodity sector right now, which and of course the all the AUD and ZD and USD. Sorry, no, CAD, Canadian dollar. All of them are really enjoying the moment right now because the commodities are strong, and those are commodity-linked currencies, and that's why you're seeing those rallies. And of course, as mentioned in the AUD JPY, there's also a risk-on environment right now. So basically, you have people buying equities, so jumping out of safe havens such as Japanese yen. We have a stronger commodity sector, and that's why the AUD JPY is just exploding to the upside. Now here we have a pair where GBP is kind of still strong, and but it's a battle right now of the the two kind of stronger currencies. And here, for example, GBP CHF. Now there we can see that yes, with the strength of GBP is seen here because CHF being a safe haven is not very attractive right now, and that's why we're seeing a bit of a push higher here. So that's why we have this little kind of disagreement between the two here, and that's why I mean at the moment let's say I'm leaning towards the upside on this one. However, However, I'm going to be very careful if suddenly, let's say, some sort of weakness comes in into the pound, then yeah, this could roll over very quickly. And I'm keeping an eye on this actually this 1.2280 zone, but I think I need to adjust this level a little bit as well. So keep your eyes on this better. The 0 was a 1.2264 level. You can see it acted as a very nice area of support. So if we drop below this 1.2264 territory, this may open the door towards some lower levels. And finally, EURUSD, guys. So yeah, this one drifted lower, moved back below this the psychological 1.10 zone. I said to you previously that in order for me to go for some higher levels, I needed a push above the 1.1121 zone here, and of course a break of this downside line was needed as well. For the downside, I needed to see a break of this upside line taken from the low, the 7th of March, but also I need to see a drop below this hurdle here, just to be a little bit more on the safe side, guys, because what I don't want to see here is this one starting to move sideways, because in a way, if let's say if it drifts lower here, tests the 1.0891 level, and then rebounds, well, we will get ourselves a very nice, beautiful range. So let me just, let me reuse this one maybe. Actually, yeah, will be nice. So something like this. I mean, I don't want it to be this, but you know, we cannot exclude these scenarios. So like I said, I just don't want this to be ending up being somewhat of a range here. And yeah, then of course, that's where I hate range. I don't like ranges. I'm not saying I hate them, but I just don't like them. Personally, I like trending markets, but again, range is also a trend, but you know, it's a little bit more either up and down. That's what I prefer. But either way, guys, for now, yes, I'm leaning a little bit more towards the downside, but I'm going to be very, very careful near this 1.0891 zone, because if it provides somehow support, we might see a little rebound, and yeah, this whole kind of thing with the range again. But if this gets broken, that's where more sellers could join in. So guys, that's it for this session. I really hope you found it useful, and thank you very much for watching and listening. I really appreciate your views, your likes, your comments, guys. I really do. So thank you very much for that. I really, like I said, it means a lot to me. First of all, of course, I really hope you found this useful, and in general you find my videos useful. So if you do, then yes, thank you very much. But yeah, if you want to join me tomorrow morning, as always, at my Traders Espresso, 7 o'clock GMT time. For now, have a nice trading day, guys. See you later. Bye-bye.